Hello, everybody, and welcome to Investing with IBD for September 25th, 2019. I'm your host, Arusha Pierce, and with me in the studio today is Evan Medeiros, founder of The Trade Risk. Thanks for being here, Evan.
Thanks for having me. Pleasure to be here.
On today's podcast, we will talk about the current markets, automating your trading process, and then we will end the episode with some current stocks. So let's start off with the current markets. We are currently under pressure. The markets have been pretty volatile the last couple of days with a lot of the news going on with the president in Ukraine.
Sure.
4 distribution days on both the NASDAQ and S&P, so that's starting to collect there. Yep. But the overall indexes they're holding up well. They got back above the 50. The NASDAQ got back above the 50.
Sure. They're
within new highs, but a lot of these former leaders that did so well in the first half of the year, they're getting crushed.
Totally. Yeah, totally. You saw it last 2 weeks. Really, some of those leaders started to break down. But I still, I still find that the market is holding up, and breadth overall is still kind of hanging in there. So we're kind of consolidating under that resistance, and we're waiting to kind of see, is it a rotation, from those growth assets into perhaps defensive or energy or financials maybe, and that's kind of where we are right now. It seems like it's like a choppy place where you sort of have to defend and perhaps maybe raise some cash, but we're still holding. So it'll be interesting to see, particularly this week, on how we finish out and how we finish out the month.
Absolutely, yeah. It's amazing with all the bad news that's come out, or all this really disturbing news that's come out over the last couple of months. These markets are within striking distance of all-time highs.
Yeah, it's crazy. Yeah, it's crazy to see just 1% away from highs or 2%. That's it, right?
Yeah.
And we both know like that can happen in one day, where we're just suddenly like, oh, it's back on. We're back at highs. So yeah, it's it'll be fun. It'll be interesting to see.
Definitely, and so as you mentioned, that there has been a clear rotation from a lot of the technology stocks more towards retail and energy.
Yep.
And so maybe that's the new batch of leaders that can lead us higher. We're going to have to just wait and see. Now, really the key is in these kind of choppy markets, as Evan mentioned, you don't want to be aggressive at this point. It's more defending. Raise some cash if you need to, and you probably have had to over the last few weeks if you've been in some of these fast-moving tech stocks. And then, be patient.
Yep.
Let things really set up, and then let the market slowly pull you in. That's one thing that I've learned the hard way. You don't really have to put everything at once into the market. For the next rally, it's going to give you plenty of opportunities over those first 3-4 weeks.
Totally. Yeah, totally. I think your guest last week, Mark
Minervini,
yeah, absolutely. He had a great quote where the market gives you feedback, right? And I think that's like this is the perfect spot where the market is giving you that feedback, getting stopped out or perhaps not getting those setups. So yeah, I'm with you on that.
Yeah. I mean, that Evan brings up a great point here. If in the beginning of the year, a lot of the stocks that you bought, they're working well, right? You were making money, you're making progress. Now over the last few months, a lot of decisions, at least for me, they have worked not very well.
Right.
It's like I am convinced I am snake bitten because everything I touch just blows up the next day, right? And so when you're in that kind of environment,
sure,
you have to get that feedback, listen to the feedback, and say, okay, let me slow down, let me reduce my position sizes. I'm going to raise some cash. I'm not going to be aggressive, get off margin, all that kind of stuff.
Mm-hmm.
And then wait till you kind of get back in step with the market.
Totally. Yeah. And
so with that said, Evan, let's go into how you got started, because it's a great story, and I think we in many ways shared a similar kind of path. We were both went from the technical side of in software, and then we started to love trading, and then we kind of veered off in this direction, going more really towards our passion. So yeah, why don't you walk us through that?
Yeah, sure. So I bought my first stock when I was in college, and I transitioned really from the online poker space. Yeah. So I used to play a ton of poker online, and really taking the game seriously. Used to play, I think, 8 to 14 tables at once online. Too much probably.
Yeah, I guess that is.
I remember in college taking a final exam and having one table on the side, still taking an exam and still playing one table of poker. Yeah, it was yeah. But there was, I didn't necessarily do it, just for the fun and having drinks and, that type of real recreational. I was taking it very seriously in the sense of buying all the books I could, learning all the odds.
Yeah.
Back then, I didn't realize it at the time, but I was really prepping myself well for the stock market and for trading.
Yep.
They used to have, back in the day, the poker HUDs, and they would show you all the statistics on your opponents, and you could actually see things like the percentage that opponent would fold to a 3-bet. Okay. And you can use that information, right? And you can take a very data-driven approach to actually playing the game of online poker. So that's what I did for basically paying my bills through college was online poker. And the transition happened back in 2008 or 9. Of course, we had the financial crisis happening, but that didn't matter to me. It was all, poker was what I was interested in.
You had a financial crisis of your own, though.
Exactly. And it was the fact that the big poker stars full tilt were getting sort of ejected out of the U.S. markets. They could no longer accept U.S. players. So, I had all this time and research and energy that I was spending in this game of poker suddenly all free up, and I said, oh man, I can't play online. I don't want to go to a casino because that's,
Well, for one second, did you think that maybe I should move to another country where it's still legal? Did you ever consider that?
I thought about it. Yeah, I did actually, but it just didn't make sense at the time. And I was thinking about, VPNs, like how can I get around this? And, too bad crypto was a little more advanced because I could probably start using that. But that really made me think like, okay, I can't do this anymore. And it was really through some of the forums and poker friends that I had.
Yeah.
A lot of those guys at the time were like, well, I guess it's back to the stock market. And at the time, I knew what the stock market was, but I had no idea like this is the same or this is similar. Like that didn't register with me until, 08, 09, I kind of pulled off of the online poker and really got the bug for trading and bought my first stock in 09.
What was the first stock you bought?
So the first stock I bought was, it's funny enough, it was JetBlue.
I know
and it was totally the buy what you know.
Yeah,
or, what I mean?
love JetBlue. Yeah.
Absolutely, yeah.
Especially back then. They're the only ones who had the TVs. At that time,
exactly.
Right?
Yeah, exactly. Which we'd always fly as a family, or if I had to go anywhere, it was JetBlue on the East Coast. And that was the first stock I bought. So it was really a buy which you sort of know and transition that way. And then I quickly kind of got the bug for technical day trading. I just jumped right into the fire of day trading because, I was doing a lot of hands playing poker, and I was like, well, sitting with JetBlue isn't that exciting. Right. But if I could be in and out of the markets and really kind of accumulating occurrences, that's where I want to be.
Right.
So unfortunately at the time, I wish I had the experience to understand where prices were on just a relative basis,
Seriously.
Right? 2008, 2009, the best buying opportunity probably, maybe I'll see, who knows, but I wish I just held those stocks instead of going into the day trading.
All do.
Right, of course, totally, right? But that was really the transition was around that time.
And so how did you learn about technical analysis? What were some of the books that you got into at that point?
Yeah. So funny enough, and I know he gets some grief, but Jim Cramer. Jim Cramer was one of the first that I transitioned into because, again, I didn't really know about the stock market, but I knew there was this guy yelling on the TV, like pushing buttons and running around. And that was one of the first names that came into my head. So I bought a couple of his books and William O'Neill, How to Make Money in Stocks. It was literally probably the third book I bought, which was a great choice, to really kind of go down that technical side. But those really sort of got me started. And then I think over the time I don't do any day trading anymore. It aged me, I'm sure. It's just an intense, it's a competitive landscape to be in the very short term. But it seems now that I'm more on the swing trading longer term side and more of a quantitative approach to trading.
Okay, and so now day trading, you would close all your positions by the end of the day.
Yes.
Right. Now, how long do you, on average, hold your positions?
Yeah, so I hold for about a week or two, all the way up to 2 months.
Okay.
I try and settle into some positions, and I feel like every year that goes by, I make less trades per year, and I kind of extend that time frame.
Makes sense.
Maybe it's the bull market we're in. Maybe I'll have to adapt if we start seeing some crazy volatility that really sits.
Right.
But for now, that seems like a sweet spot to me. not adrenaline chasing, staring pre-market after hours, trading earnings, all that stuff. Leave that behind and take a little more relaxed approach.
Yeah, and Jesse Livermore said it best. It's not the thinking, right? It's the sitting, right? Yeah, really, you have to be there at the right time, and then just let the market work for you.
Yeah.
So the indices are near new all highs, but remember, underneath the surface, there are a lot of growth stocks that have gotten hit. So make sure you're managing your risk, just like Evan was talking about. The risk, it doesn't matter between stocks or portfolio, right? You need to have a risk management plan in place to make sure you don't go broke. So let's take a quick break, but when we return, we are going to talk with Evan about automating your trading process. Stay tuned. Whether it's fear, greed, hope, or pride, to become a successful investor, you need to know how to overcome these 4 emotions when your money is on the line. Join us for a free IBD webinar on October 8th, featuring special guests Scott O'Neill and Chris Gessel. They'll show you how to fix bad stock market habits you may not even realize you've adopted. Go to investors.com/webinar to register today. Evan Medeiros is our guest on Investing with IBD. Okay, Evan, let's talk about automating your trading process. And I think the first thing to do is, why should people consider automating their process?
Yeah, so there's a couple of benefits. Really, the biggest, I think, is getting a rules-based approach and really kind of hammering it down. Because putting it to paper, putting it in code, that really can clarify your thinking. And I think the other benefit really is the ability to review your decision making and results after the fact, right?
Yeah.
So if you have an automation process, or just again a very rules-based process, you can see very clearly what has worked and what hasn't, and you can make adjustments and you can make informed decisions about your process going forward.
Yeah.
So automation and putting it. I think it's a great direction to be in.
So a much more scientific approach versus the shoot from the hip, go by the gut kind of emotional kind of approach.
Totally, 100%. Yeah, and to be clear, like I don't think we all have to be quants. I don't think we should. I think there totally can be an art to trading. I think just if you had the spectrum of kind of 0 to 100, I think you probably want to be closer to the quantitative side. Just again for the clarity of documentation and to analyze those results. But I definitely think with the experience, if you've been trading for 10, 15 years, that's a lot of intuition and experience, and the pattern recognition of the human, it still hasn't caught up, in terms of what computers can do. So leverage the technology, but the art of actually, that intuition is still important.
Okay, can you give some examples about just quant or just quantitative that you're talking about?
Yeah, sure. So in that respect, I'm really just thinking of a 100% data-driven approach. So essentially, it doesn't matter what you or I think about the chart. It's really what is the data telling me, and what is the historic data, what has happened in these situations to actually plan your trades and sells, buys, everything based on past data.
So for instance, a breakout, maybe using that as a buy signal or pullback, you're going to use the data to tell you for each different type of stock that's a better thing, or your style, you do better at breakouts than pullbacks, things like that.
Yeah, I think you could do both, right? So it depends on how you'd want to sort of crunch the numbers, but certainly, you could run a test to say, okay, what happens when I buy a new 30-day breakout, right? And then, of course, this opens up a tremendous amount of questions, because where are you going to sell? Are you going to take profits? Are you going to manage risk? Like, there's just a wide range of sort of ways that could unfold. But I think looking at things to say, okay, if I buy a 30-day breakout, what are the odds it goes up 5%? How many times does it go up 5% versus falling 5%? And you can start to run these tests and start to say, okay, it gives you an inclination about stop losses. It gives you an inclination about success ratio, perhaps. And again, they're all building blocks where you can start to inform your decision making. And of course, we know this is all backwards looking, right? So markets are dynamic. They're never going going to be the same. They'll
Right.
certainly rhyme, but we'll always have different ways of sort of the way the markets unfold. So we have to take everything with a grain of salt, but
Yeah.
it's sort of the best we have, right? Is
Yeah.
to look at the past, what has happened. Maybe that can inform our future decisions.
Right. And a lot of times with backtesting, you want to usually set 30% aside to just chance. Right,
Yeah.
it was just that unique environment.
Totally.
And that's one of those traps of backtesting, right? It's like
100%.
people think they found the holy grail,
Right.
and then they try to apply it in the current markets, and then it just completely works the opposite way.
100%. Yeah. Curve fitting or
Yes.
really optimizing your backtest is a bad idea
Yeah.
because there's always going to be a result that looks best.
Yep.
There's always a perfect solution you can find, but if you have to really nail down some weird parameters and if you tweak one thing and the whole thing falls apart, it's probably a bad idea. It's probably not a way you'd want to go forward type of thing.
So how long? So after you come up with a strategy based on backtesting,
Yeah.
how long do you test it in real time in the real markets to get an idea that, okay, this is working, or this is not working? Maybe I need to go back and adjust some of the variables.
Yeah, totally. Well, as long as you're willing to, as patient as you can be, the better. But it depends on the type of system too. So if you're, for instance, looking to develop and backtest on a day trading strategy, that might trade 10, 15 times a day. That sees a lot of occurrences, a lot of market regime shifts in that strategy.
Yeah.
Maybe you only need a month, right?
Okay.
100 or 200 trades. Maybe that'll give you enough confidence to perhaps allocate some real small amount or make some adjustments. If you're doing a longer term swing trading, position trading, trend following, anything longer, you may need to wait a year, or you might need to wait a good amount of time.
You might need to go
honestly.
through like a whole cycle.
Totally. Yeah, if you really want to be confident in it.
Yeah.
That's the scary part. And again, it's one of those things where there's no guarantee. So you waited a year and then, it didn't work out, and then you're like, oh, back to the drawing board. And so it's a tricky process, but again, it's a way to inform your decision making and try and do this as responsible as possible.
What are some of your favorite strategies that you've seen over the last number of years now, or that you found, at least for yourself?
Sure.
Because a lot of times it's different, right? Depending on the personalities,
100%.
Who can handle what type of volatility. But what are some of the strategies that work best for you?
Sure. I think over the years, probably the biggest adjustment in strategies for me is that I've been trading a lot more reversals and pullbacks rather than breakouts.
That makes sense.
And again, it partly has to do with my time frame of like that 1 week to maybe a month and a half.
Yeah.
It is a little more nimble. It's a little quicker.
Yeah.
So for me, I found that, breakouts are still great. I still trade them, but you really need the market environment at your back, right? So in sideways markets or in things where we're still kind of choppy, 2015 comes to mind. I mean, even the past year and a half.
This year actually is kind of reminding me a little bit of 2015.
100%. Yeah, exactly. And I think this is the type of market environment where perhaps you're finding more success waiting for that stock to pull back 5, 6, 7 days into some support and looking for that type of move. So I think a little more mean reversion reversals. That's kind of where I've more transition to, at least again for my time frame.
So for kind of the key support areas, are you looking more on a price level, or are you moving averages?
I tend to like price levels. That's what I use most. I like moving averages to sort of get a gauge of momentum or trend still.
But which moving averages do you generally focus on?
So for me, it'd still be pretty quick. So I like 1 month and 3 month moving averages. So 21 day and maybe like a 63 day. But I like the time series that lines up on a week or month or multi-month basis, and then support and resistance on a price level is a lot of what I like to use.
Okay. Yeah. Okay. Now, what are some of the other benefits for the automating this trading process?
Yeah. So I think I've been fascinated over the past couple of years with really trying to minimize the amount of discretionary decision making that I input into the system, but also just the time I'm putting into the system, because our time's valuable, right? We could be building a business or working a salary, earning a salary, friends and family, making meaningful connections. So, if you have to spend 40 hours a week and you're underperforming the market, or there's the trade-off there. So for me, I think it's removing myself from the strategy and really freeing up time. I think that again, for automation wise, is pretty important. And again, you don't have to be a software developer. You can do things like price alerts with your provider. I mean, just you don't have to stare at a screen for a breakout.
Right.
You can just let technology tell you, okay, this is breaking out.
Yep.
Come back from the gym and put this trade on, right?
Seriously, yeah.
Good to cancel orders with your broker, like bracket your trade, stop loss and target at one time. There's lots of little things that can really free up time, and I think traders should easily take advantage of those low-hanging fruit.
Yeah, I always tell people that you just have to be there at the right time.
Totally.
When it's giving your buy signal, either a breakout or a pullback. Then after that, you don't want to be around too much, because the more you watch the charts, the more you watch the market, you're going to find a reason to get out of that stock.
100%.
And it's amazing. And even time frames, I'll look at a lot of daily charts, but I'm always better off, and I think most people are better off looking at weekly charts, because that's giving the truer picture. Even monthly charts are great too if you want to hold them longer, right? So
Absolutely.
you have to kind of keep all of that. But it's funny. One thing I also say is that you're not going to be able to find these great stocks, and you're not going to buy them properly with a chart.
Right.
You're not going to really do well or capture huge gains on some of these stocks or these monster stocks or a big winner if you're using a chart too, because they can scare you out of these things very easily.
100%. Yeah. Locking in profits early. I'm guilty of that. That's probably, I can get out of things quick, but it's the, I got to remember not to get out of them too early when they're working.
It's very difficult. And so I think your suggestions on kind of automating this and sending some price alerts, even just that simple kind of place where you let the price alerts tell you, okay, now let me look at those stocks. That you'll find that you're trading less. You're going to be a little bit you're going to be happier.
Totally.
And most likely your progress is going to be better too.
Totally agree. Yeah.
So let's talk a little bit more of some of the advanced strategies that you might incorporate. Now, you work with clients on some of these strategies, and you help them backtest and build their own strategies. What are some of those kind of advanced things that you may suggest to them?
Yeah, sure. So, it depends on how advanced you want to go, but really the primary swing trading strategy and process that I run now, there's a little bit of discretion involved, probably about a 5-10% wiggle room. But one of the more advanced things that I sort of just finished and polished up for myself is kind of the full trade manager. So as soon as I put that position on, just like you say, I can just totally walk away. I don't have to think about it. I have to look at it.
It automatically sets all the stops
everything.
And to the upside and the downside, or all the sells, the upside and downside.
Absolutely, yeah. So it has in there the coordinates of where we should be, scaling some profit out, trailing a stop. It's doing everything in there. It's programmed, partly from backtesting and modeling, but then from my intuition, my experience, and the results that I've accumulated over the years. So it's got kind of my intuition as best as possible baked into the code. And again, it's doing the work for me. So it really just frees up a lot of mental capital, and I can either work on other strategies, or I can, again, just document results and make adjustments kind of going forward. Yeah.
What about stock selection? Do you automate that too, or so are you letting the screens tell you what stocks to get into, or are you using more your intuition and experience?
Yeah. So that is where I have a little bit of blend of both. Okay. So I definitely have very rigid criteria that I'm looking for in my stock screens. And once I get that result back, once I see the stocks that are coming back from those screens, I'm applying a little discretion at that point. Part of it is kind of just to make sure there's no earnings coming up and there's no other announcements or anything like that, just to make sure that that's all in the clear. But the other part is just kind of pulling up the chart and making sure that all of the quantitative, criteria that I wanted to see makes sense or is in the right place on the chart, if that makes sense. So just making sure kind of reward to risk is there, everything kind of maps out, and I sort of put my stamp of approval on it at that point, and then it goes into the trade manager pipeline, and off it goes. I just wait for the results at that point. So totally have scans that are built out, but just a little bit of oversight in that process.
Yeah, no, that makes sense. I think that's I'm always been a favor of just the hybrid approach.
Totally.
Because that's where you're going to let your experience
Exactly.
really say, hey, wait, that doesn't look right. I don't know why, and it somehow came through, because screening is very, very important.
Sure.
But you're always going to have some things that are just going to come through the screens that aren't right.
100%.
And so you're kind of the last step in that.
Yep.
Removing the emotions in trading is critical, and automating the process is a great way to accomplish this. Coming up next, Evan and I will discuss 3 stocks that are trying to set up in this market. So stay tuned. Want to find stocks like the ones on this podcast? A lot of the best names we talk about come from IBD's exclusive stock lists, like the IBD 50 and the Big Cap 20. Whatever type of investor you are, we got a list for you. You can access every one of IBD's lists, plus stock ratings, exclusive analysis, and one-on-one coaching with a membership to IBD Digital. It costs less than $1 a day, but for podcast listeners, we're offering an even better price. Go to investors.com/podcast offer right now and get your first 2 months for only $20. We are back with Evan Medeiros. So, Evan, let's get into some current stocks that are hanging in there. They're pretty near new highs in this market. And the first stock is a classic one, Google. But, it's one that, out of all the FANG stocks, and FANG did so well the last few years. Mm-hmm. This was the one FANG stock that didn't really do well.
Right.
But now they seem to be hanging in there, and they're within striking distance of new highs.
Totally. Yeah, Google is one that just hit my scans again over the past couple of weeks. It's one that I haven't traded or looked at in a while.
Yeah.
It's just like you say, it just kind of went sleeping and didn't go anywhere. And it still arguably is kind of in this quiet phase of mostly going sideways since 2018, the start. But it is starting to work back up now, and this is a current position for me as of a couple of weeks ago, and I picked it up as it started to resolve the August range higher, and I like it kind of over that 1200 level, but it's kind of grinding up here. I'm glad there was no follow through selling today to yesterday's kind of bearish engulfing candle there.
Yeah.
So I like the fact that it kind of turned around here and is getting closer to its highs, and the fact that it has gone nowhere for 18 months or whatever the exact time is kind of a benefit here, because we do have a lot of kind of pent up energy potentially in this stock. So for me as a swing trader, this was a recent entry, holding on here, and honestly, I mean, I probably would be a small seller up there as it retests those prior highs. Just my strategy.
Just to take some off the table.
Just to take some off the table, because who knows if that breakout fails, and it's been fickle for the past couple of years now. So let's let it prove itself, and hopefully it can break out. And I'd love to keep a piece into it.
So when you said about the August range right there, you're talking about just within August when it was trading between 1209 and 1150, and so as it emerged out of that on September 5th, that's where okay,
bingo,
starting to change a little character. Let's start to enter in the position here.
Absolutely, yeah, exactly. That was the rationale behind it. Momentum starting to pick back up again, and again, it still needed to prove itself, but it is holding in there. I know there are a couple of names, kind of like Facebook. There are a few others in that spot that all started to try and pick up, but even those a little faltered a little bit. And Google seems pretty sturdy here, but who knows? It still has plenty to prove.
Yeah, it's a large cap stock, tech stock. Now, from an earnings level, it's decreased over the last few quarters. The sales have been pretty steady, but it has flown under the radar for so long that I wouldn't be surprised that if it kind of gets, maybe the catalyst is an earnings kind of report or something like that, but that it actually kind of surprises everyone and all of a sudden does things. They're working on a lot of crazy things in the background. It's not just search, right?
Yep.
And so maybe one of those other things that they've been working on takes off. So it's definitely one to always keep an eye on, because it's one of the beasts out there.
Totally. Yep.
So let's go to the second stock, and this is actually a cloud stock that's holding up well in this market. It's very unusual, and it's Proofpoint, ticker symbol PFPT, and they're security stock, and they're involved in that whole business. And what's kind of interesting that stuck out to me here is half of the Fortune 100 companies are customers of this.
Oh, no kidding.
Yeah, so they made some pretty good inroads within some of the larger companies out there. And on a chart level, they've been setting up pretty well too.
Yeah, I mean it's as good as you could find out there. I mean this has really been kind of nonstop to the upside since its IPO back in I think 2012. But it is just bumping up against these prior all-time highs. This 130 level I think goes back to 2018, and it hasn't broken out. Kind of like Google, it's developed in this big range here sideways. But like you say, most of the high momentum growth names, they've been really getting hit hard over the past couple of weeks, and this definitely is showing some relative strength here. So this would be kind of a breakout setup, and no position here, but I'm just kind of watching this to see if this can actually get some momentum and get some type of catalyst over this $130 level. I would like to be a buyer of, into strength here if this can get going, but who knows? It still has to prove itself, but it is a pretty good looking candidate here.
Yeah, the last quarter, the March quarter, they had 13%. On an earnings per share basis, and they jumped up to 64%.
Yep.
So a little momentum there. They've been pretty steady with the sales. And what's interesting about this on a technical level, I'm looking at a weekly chart here on MarketSmith. The bases are all kind of tightening up. From last year, they had a really big cup with handle. Yep. The depth of that was 41%. So it corrected 41% there. Then the next cup with handle it formed, it was 22%. And now this most current one is 17%. So there seems to be some buying underneath that are just slowly absorbing all of the shares that are available at that price.
I love to see like the tightening of those ranges and base on base. I like that action. Just really can define your risk as a trader, right? So, but yeah, totally agree. 130, 129.50, that area, that seems like the magic one.
So that's another one to take a look at and add to your watch list. And the final stock is it's not a tech stock.
Nope.
It is Toro Company and ticker symbol TTC. And as everyone knows, these guys are a landscaping company and they make a lot of equipment to do that. And they do have an interesting a chart that's slowly setting up. It's kind of interesting. They have a big a decent cup with handle over the last few months. Then they have this really large base that's been going on for, 2.5 years or 2 years or so?
Crazy. Yeah. Yep. Absolutely. Yeah. This $75 area seems where it's been stumbling since, 2017. And yeah, it's not a tech name. It is in the industrial sector, but it is, in terms of relative strength, it's holding up. It's kind of basing underneath that resistance. It is got a smaller size float as well, which is interesting. So that could really start to move if it starts to break that resistance area. But I like the fact that it's tight. It's basing under resistance. Again, nice, well-defined risk, clear levels. That's what I like to see, but it still needs to prove itself. So no position here yet. It's just kind of a name that is on the watch list for a potential breakout.
When you say well-defined risk, what would you consider the risk to be here for Toro?
Well, I think you'd have well-defined risk once the breakout happens. Okay. So as soon as that breakout actually gets underway, that's the beauty of breakout setups for sure, is that if you're playing for a breakout, then that's your rationale, is that it is exiting that old range and it is starting to trend and hopefully enter a markup phase. And so if we can start to get over that 75, we have that area to use. And then we even have these recent lows here around $71, $72 if you want to give it a little more room. But of course, that'll be up to your strategy and how much wiggle room you want to give it. But yeah, it's one that, again, we'll see if this market rotates here. And in industrials, maybe they'll get some love here on the next rotation after some of these growth names get hit.
Right, yeah. And you said the magic word. Yeah, you were looking for that kind of rotation.
Yep.
And looking for those stocks that are near new highs that haven't gotten hit too hard in this volatile market, because that money's going somewhere. It's going out of those cloud stocks, except Proofpoint.
Yeah, right.
But it's going into some of these others, and some of these industrial companies are the beneficiary of where that money's going. When things kind of get a little bit more volatile, or get a little bit more risky, that money tends to go into a little bit more quote-unquote safer type of investments.
Yeah, totally. I mean, some of the big funds, they can't just pull the money like we can, right? We can go to cash. Other people can't, or other people with mandates and investors. So, who knows? We'll see if TTC gets some rotation here coming up.
And what's interesting about TTC also is in the April quarter, they had -3 on earnings per share basis. And then the July quarter, it jumped to 22%.
Wow, big jump.
And then the sales, April quarter, 10%, July, 28%. So apparently someone's looking for do a lot of landscaping.
That's right, yeah.
Business is pretty good for these guys, at least in the last quarter. So those are three stocks that you want to keep an eye on. Remember, this market is volatile, and so if there is a rotation, you want to look at some of those stocks that are forming bases, and let the market tell you what to do. In the end, if you're truly listening to the market, it's going to lead you in that right direction. Thanks, Evan, for joining us today.
Thanks for having me.
That's it for this week on Investing with IBD. Next week, we will have Jim Ropel, a hedge fund manager, longtime IBD customer, and also featured in a number of investing books, too. He has a great story on how he became good at investing using our strategy, and so you definitely want to tune in. I'm Marusha Pierce, and thanks for listening. And for this week's Notes and Charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.